Let's talk about the NSE, which is climbing up really, really slowly for the 20-share index. What's happening here?
Well, what we've seen is the market is actually inching up closer and closer to the 4,000 psychological level.
Right.
Well, this has been mainly driven by the large caps, as you said it. And what we've seen is it's come so close, but we've seen it dancing around that level. What we expect is by the close of this week, we expect it to close higher. As you said, last week we had a fluke closing above 4,000 level, but that was actually an intraday high. So that actually points or signals the fact that there is inbuilt momentum to actually push the 20-share index be above that level before the close of this week.
But if you pulled out ABL and you pulled out Safaricom, and let's say from yesterday you pulled out Uchumi, there's not much happening in the market.
Yeah, really, that's something of concern, because what we've seen mainly driving the market is actually by the foreigners. And as we speak right now, their participation on a month-to-month has dropped from an average of 45% to about 25%. So with that drop, then, well, it's actually a concern whether we could see retailers coming and pushing the index up. But if they come strong again, then we'd see, as they usually participate in the big caps, then we're likely to see that the average closing above the psychological level. Because
Uchumi's story isn't credible, isn't it? 130% rally year to date, and just who knows where it might be going. Though that said, it is only the only retailer listed in the market, so we don't have much to compare it with.
Yeah, that's true. But also, when you look at its peers in the industry, Uchumi has one of the best margins, regardless of its size, regardless even of the history it's had in the past 4 years. Even when you look at its expansion strategy and the fact that it really interested a lot of investors, foreigners actually, who've been participating in the stock. But also, just to attribute the recent rise in the past few weeks, it's because of the dividend that it's announced, and since 2006 when it was suspended, this is the first time that it's announcing a dividend payout.
Right.
So I guess it's really, and because of it's cheaply priced, it's attracting a lot of investors into that stock. Yeah.
Let's talk about, well, we're expecting that decons will come into the market at some point, and maybe that they're not oranges and oranges, but it's a close comparison.
Yeah, sure.
Better than nothing at all. Williamson Tea Kenya is the other surprising one. Yesterday, the biggest gainer at the market. A lot of people expecting its earnings to be good. Are you one of those people?
Yeah, sure. But actually, the whole industry, tea industry, it's had a stellar year. When you look at the production year of 2010 and 11.
Yes.
I mean, we're talking of 64 billion tea revenue coming in. And I think this is going to trickle down to some of the tea listed firms that have tea farms in the country. So Williamson Tea, I expect the same thing to occur even to Sasini as well, and the other tea listed firms actually.
Tea and coffee, or just tea?
I think it's tea, because the last 12 months it's been we've seen production. Some of the competing countries have had production been affected by adverse weather, and on our side we've had good weather, particularly the April and July long rains, which is more than sufficient. So I guess we actually we are at an advantage point, and that beside also we're talking of the global demand has actually been going up, so, and that's one of the reasons that has lent to the high international tea prices.
Okay, let's talk about a number which is of interest to Safaricom, because this affects it directly. One, its market share is down according to the CCK data for the second quarter of the year. Overall, we now have about 29.7 million mobile phone subscribers, but Safaricom's share of that is now only 64%. At the same time, voice traffic is down, revenue, internet usage is up about 19%. When you read all this data and this news that there's an impending mobile termination rate cut, should Safaricom be worried?
I think the company should be worried a great deal. First of all, as you said, when we talk about the MTR cut, that should be coming soon in the next 6 months, that's going to cut its revenue, simply because most of its rival firms actually terminate on its network.
Yes.
So that is going to affect its revenue. The other thing about, as you said, well, I like to say this, that most of its rivals have not been sleeping. We've seen a lot of marketing, a lot of innovative offerings, and I guess this actually is causing the leakage from Safaricom's network. So I guess maybe the management needs to, kind of, match up to the competition in terms of being innovative, so that it can still regain its market market share. But you know, going forward, I think it's going to be a very tough battle because you know you cannot keep an 80% market share when you're talking about 4 or 5 market rivals that are also equally have the same muscle in terms of cash and in terms of management skill, you know, to compete on the same level.
So this market has changed from 5 years ago when Safaricom was very dominant and the competition was almost sleepy. It has gone a huge transformation. But let's finish up with the Kenya shilling, which is so far still holding steady. What are your long-term thoughts on the currency?
Well, we think the market is going to, the shilling is going to firm up, as you said, with the tea revenue coming in and trickling into the system. We expect that to firm up the shilling against the dollar. But going forward, as we enter into the election period, we expect to see a bit of weakening as, you know, money supply goes up in the system or within the country. So we expect a bit of weakening in the next 6 months. Well, let's just say until after March, or after, let's say after June, July. Then we expect a bit of firming up.